Noah Lattis, and I'm thrilled to welcome Tom Storey, a Toronto real estate team leader and host of the Tom Storey Show, for our conversation today. You may have seen Tom featured on CTV, CBC, Global News, CB24, Toronto Star. Basically, anywhere that Canadians get their news, you can see Tom. And recently, he welcomed our CEO, Max Diamond, on his podcast. So he's returning the favor here today. Tom, thanks so much for joining me this morning. I really appreciate it.
Thank you so much for having me. I'm excited to be here.
And maybe for those who don't know or haven't yet seen your show, tell us a little about yourself, how you got started, and what kind
Yeah.
of inspired you to go from real estate to kind of creating your own content.
Yeah. So, I mean, on the business side of things, so I've been selling real estate now for just over 10 years. I got my real estate license when I was 22 years old. And at that moment in time, it's like none of your friends can afford to buy real estate and their parents don't
Right.
trust you. That's just how you start. So you start actually like my first year, I built my business on rentals. I was doing rentals in downtown Toronto. I was running ads on like Kijiji. I don't even know if Facebook Marketplace was a thing then. And I would meet people, and then it got to a point in about end of 2015. Um, I had this kind of realization that the people that were doing way more business than me weren't necessarily they didn't create a better client experience. They didn't even necessarily know more about the market. They just like were more seen. They were more known.
Mm,
Kind of like, it doesn't matter how good you are at what you do if nobody knows. And so that's kind of what started it. And at the time I didn't have money to do the traditional marketing, billboards, flyer. I
sure.
couldn't afford that. So started recording myself in December 2015, put out my first market report, and the goal of that was just send to my past client list, right?
Hmm.
um, I would put them on YouTube simply because YouTube allowed it to show up on my website. That was the only reason I would post it on YouTube. And then, surprising to me, other people started watching.
Hmm.
And then that's kind of how it all started. And we started the podcast over 2 years ago now. And my co-host is in Surrey, just outside Vancouver in BC. So we kind of got that coast to coast idea of what's going on. And yeah, we've been having a lot of fun with it. And still traditionally, my business model is repeat and referral and my
Hmm.
database, but we are meeting a lot of people online these days.
Yeah, it makes sense. Just how the market's changed. That it's your marketing efforts can be your content, right, and kind of vice versa. And I mean, you seem to have like a really good knack at it, and clearly with news media picking you up all the time, they know that you know what you're talking about, and it's kind of precisely why we wanted to hear today because you got both sides of things. You know how to chat on screen and actually talk to an audience, but you also have the backing behind it all. And as Rentals.ca, we are primarily in the rental space,
Yep.
but we do talk condos as well. And I think that's kind of a good place to start about this conversation, and specifically how, we know detached home prices have risen pretty steadily over the past few years, but what I've seen is condo prices are kind of returning to pre-COVID levels. Is that right? And if so, is that kind of surprising to you?
It is surprising, actually, mostly just because of how fast the freehold properties continue to go up in price. I remember pre-pandemic, because I would track this, the average detached home was 700 grand more than the average condo.
Hmm.
It's like, that's still a lot of money.
Yeah.
Today, it's like a million. So it's gone a lot further up. And I think what happened, if you go back and look at it, because when I'm meeting with condo sellers now, it's like, you're right. Anyone I'm talking to that bought, even some people in like mid to late 2019, it's like you're kind of worth what you paid for it.
Right.
And if you look at what happened, pandemic happened, condo prices in downtown Toronto dropped 8 to 12% depending on the pocket.
Hmm.
That first 2020. 2021, they jumped back up again and had a great year. 22, of course, we know what happened. The first few months, they went stupid like everything else.
Yep.
And then they dropped off again. Last year, for 6 months, great. Last 6 months, not great. And then this year, they've slowly started going up, but it hasn't really moved that much. And it's kind of gone up and down a few times. And it's a weird situation because when you're talking to buyers, it's like, you could buy a condo in 2024 for the same price they sold for in 2020, but you're getting a 2024 interest rate.
Right.
So it's much more expensive to own. Even though the prices are the same, the
Hmm.
cost of ownership is probably 20-25% more per month.
That's especially with interest rates now, even though they are coming down a little bit, they are still, after years of steadily going up. That doesn't surprise me. But we're located specifically in Toronto, and I think it's a good way to kind of centralize this a little bit, talking about the Toronto condo stock in general. Like a significant portion of it's aging, right? It's not necessarily the stock that people are getting into. Are these newer condos? Are they older? What's the kind of stock that seems to be moving right now?
You know what's funny is my answer is going to surprise you.
Hmm.
For many years, if you got a listing in a condo building that was over 25 years old with big floor plans and high maintenance fees and maybe amenities that need an update, they were tough to sell.
Mm.
Very hard sells. What's been shocking to me this year is the listings I've taken, and at high price points too. I had one recently that we listed at just under 1.8 million in a 35-year-old condo right on the waterfront, like gorgeous space, looked at Lake Ontario, 1,700 square feet interior plus a huge outside space.
Hmm.
And I was like, you know what, guys, this is going to take some time. And we sold 100 grand over asking with 3 offers in a week. And I'm like, what
Wow.
is going on? Because you're told like we need affordable housing stock, but all the quote unquote affordable condos are sitting on the market not selling. And the reason behind this is if you look at like, well, it always comes down to who's the buyer. The buyer for these large old condos is downsizers that cashed out of their $2.5 million house in North Toronto, the
Hmm.
areas that we all know. And they're not impacted by interest rates, and they're interested in these big spaces because they came from an even bigger space.
Mm.
Where that 500 square foot, what we would typically consider investment condo or first time home buyer, well, those two buyers, investors, are just like not participating right now because unless they're super cash heavy, the numbers just don't pencil.
Right.
And then first time home buyers are still today being stress tested at 7%, right? So they're just, that's why it's odd that you'd think the smaller, cheaper stuff would move. It's actually
Hmm.
the complete opposite.
Hmm. That's interesting. Do you think that can maybe potentially lead to a shift towards people building more purpose-built rentals in the coming years then? Because if the cheaper stuff's not moving, maybe the cheaper stuff is just still unaffordable. So okay, what's like I feel like
Mm.
that those people are still renting then, and then maybe they would rent longer if they can have a greater supply per, because we know it's been so undersupplied for decades now. I'm curious what to see in the coming years if there's going to be maybe a shift towards let's build more apartments than condos.
I think that's absolutely what's going to happen. I
Hmm.
think for the last 10 years, new condo builds sold to investors and then rented out created all the rental inventory in Toronto, right? And you look now, these purpose built rental buildings, which I would argue is probably a better living experience. It's better managed. It's not like a part-time landlord that doesn't really understand how things work. It's a
Hmm.
corporation running it, right?
Yeah.
Um, but the big caveat with those is like it's great, but they're not cheap.
No.
They're
No.
they're luxury-ish accommodations, even if they're 500 square feet. And in Ontario, those buildings are not under rent control. So if I'm a renter, I'd actually probably go out of my way to rent in a building built before November 15th, 2018. If I'm a condo investor, I'd go out of my way to buy in a building built after that.
Right.
And you'd be shocked by how many people still don't understand how the rent control date works on either side. They have no clue.
No, and it's something that we tried to really hammer home is that you can get into a new apartment building, but if it's after that date, then it's kind of free game for them to increase as they see fit. And a lot of the newer buildings that I've been touring, it seems that they're trying to really promote like a lifestyle behind it. These are
Mm,
purpose built rentals specifically,
yeah.
and it seems like they're really merging between apartments and condos. Where these new buildings now, they have bowling alleys, they have pools, they have like an office space that you can rent out private boardrooms and hold meetings there. Tons of outdoor greenery space. It seems that almost new purpose built rentals are kind of becoming more towards what people would maybe consider a condo lifestyle, and I think that's maybe more attractive to, like you said, maybe somebody who's downsizing, that they kind of
Yep.
want to have that lifestyle, but want somebody to manage their building, and maybe the rent's a little bit cheaper than their mortgage. So kind of interesting to see how that actually is changing what a purpose built rental is and maybe what a consumer is looking for.
It's a good point. I have someone I know really well that when one of these new purpose built rentals was first launched, she got in at like a relatively good rental rate,
Hmm.
right? When they're trying to fill the vacancies at the beginning, they offer incentives. After year one, hike the rent. But she was like, okay, it still makes
Okay.
sense. After year two, they hiked it again to a point that was like, this doesn't even add up. Like, there's no comparable that says you can get this. And she ended up just leaving and leasing a house down the street, a house for the same price. Like, it's not a huge house, but
Still, but it's a house. It's a house.
and so
Yeah.
that's the thing. I think, like, if you're downsizing, I think these buildings are perfect, right? I
Right.
think it's great if that's the lifestyle you're looking for. Um, but they're also like me. So I can give you this example as myself. I didn't raise rent on one of my investment properties recently because the tenant's so good,
Hmm.
and I'm like, they're paying close enough to market. I'm not going to do it. Rio can or Allied or whoever builds these purpose. They're not forgetting.
No.
They're not
No.
gonna forget. So I think people just need to be made aware of that because you're right. This is the future of at least rental stock,
Hmm.
and especially right now. Like developers for condos, nothing's selling.
No, that's what I was going to ask you too. What are you seeing for the current housing supply right now, and maybe even condos and detached homes? What I hear all the time, anecdotally from friends, family, and people in the industry is I see cranes everywhere. Everyone seems to be seeing these cranes. And it seems to be to the public eye that, oh, there's cranes everywhere. There must be a ton of new supply coming into the market. What, in fact, are you seeing?
So I mean, if you see a crane, it means the building's already 70% sold minimum, right? That or else they can't put a shovel in the ground. And that's actually why I think that rule at some point should have been adjusted because that incentivized the developer just to sell to investors. And then you
Mm,
get buildings when they launch just being 80 rentals hit the market, the same day, right?
right.
So if we're going to talk about resale housing stock, I live in the east end of Toronto in an area that people want to move to because of school districts and things like that. Houses are selling in a week on my street all around me.
Hmm.
But then in the downtown core, like as we're recording this, I have 9 condos for sale right now. And my job now is to deliver bad news to people. That's basically what I do all day. And I've been through this before. And this, by the way, this isn't actually the worst condo market I've been through. When the pandemic hit, prices were dropping so fast
Hmm.
and no one knew what was happening. And right now it's slow and absorption rate's not there, but the prices have surprisingly held a lot longer than I thought that they would. Um, but if you just look at the numbers, there's more condos for sale right now than there has ever been before in the city of Toronto. And maybe that makes sense because we've been building a ton of them for the last
Yeah,
10
are,
years.
are are a lot of them, when interest rates were really low, I guess that's kind of when people were building and investing in them. And now the interest rates are what they are. If they're not moving, I guess the idea is that maybe these owners are trying to rent them out and kind of recoup some of their losses. And maybe we have a chance to have a little bit softer rent just because they're not moving. Like I'm wondering if because interest rates, I'm sure, have played a huge factor, and we'll get into that, through our conversation. But
Yeah.
I would imagine there's a ton of condos that were built 4 or 5 years ago, maybe even up 10 years ago when rates were low. Now they're ready. No one wants them. So let's rent them out, maybe at a little bit softer rent than market value.
And not even let's just rent them out, but if I rent it out based on when it closed and what mortgage rate I got, probably, and this is being like super realistic, it might be worse than this. I'm losing $1,500 a month in
Wow.
carrying costs.
Hmm.
So I'm actually looking at Bank of Canada is going to continue to cut.
Yes.
It's very clear on that. They're going to continue to cut. By the end of next year, they might be at 3 or lower than that on the overnight rate. And I think they probably went a little bit too far. They probably should have stopped at 4.5 anyways. So it's like getting back to where we are today is just kind of where they should have been, in my opinion. Um, But if you just look at it right now, there are so many people trying to offload condos because they're just getting absolutely destroyed on the monthly cash flow. They're just so negative. And if you bought it pre-construction, to make matters worse, if you bought it 4 years ago and you paid $1,300 a square foot, I can tell you right now, condos resale are selling for $1,000 a square foot in downtown Toronto again, just like they were in 2020.
Hmm.
So not only are you losing $1,500, $2,000 a month, but it's probably not even worth what you paid for
No, no,
it. Right?
no.
So what I actually think is going to happen with the interest rates coming down is you'd think, okay, interest rates coming down create more demand into the market. What I actually think why it will help condo market get a little bit better in terms of transaction volume is because it's going to force sellers to take their listings off the market. Like if you've been
Hmm.
riding the variable and you're losing $1,500 a month, well, now it's 1,200, and by mid next year it might be 800. And I think they're going like, okay, it's not as bad as it was. The price growth still isn't there. I don't want to sell at a huge loss unless I make so much money in my other job that I can use that as a capital loss, and that's an accounting question, right?
Hmm.
Um, so I'm just going to take it off and I'm going to wait till the market gets back to a number that I like. I actually think the rates going down is going to pull listings off the market from the people that were like, I'll sell if I can do it, but I'm not giving this thing away. But there's still many people that are in really tough spots.
Yeah, no, totally. And what I kind of thought when the rate's going down, what that might do is it might incentivize turnover in these rental units because, as we know, like vacancy rates are extremely low. We have some areas in the country that are like sub 1%. So there's, the demand is just so high for the supply that we're seeing. But a lot of that is turnover rate. People are not moving out as they used to and transitioning into the ownership market, whether they be condos or homes. So my thought is, if interest rates come down a little bit, hopefully that would potentially spur a lot of renters who are now maybe ready to buy, and that might increase more supply, not only rentals but get these condo and homes moving. Is that kind of the relationship
Yep.
we're looking more at interest rates as well? Besides the whole, if money's cheaper, you can build more, maybe build a little cheaper and faster as well. So that's how we're looking at interest rates, just to kind
Yeah.
of see how to spur the market a bit.
I mean, I think if you break it down right now, like if I was currently renting, um, and and I'm paying market rent, so not above, but I'm paying market rent, and I were to run the numbers on, well, maybe I should just go buy something similar because I've saved the 20% down payment or
Mm-hmm.
whatever you got. Even if it's 15%, you have a bit of mortgage insurance. Like you can run the numbers. It's just so much more expensive right now to own that same property versus rent. And then, and not, I didn't want to come on here and be all negative,
No,
but
hey.
if you, even if you bought it, if you got a mortgage rate at, let's say 4.5, let's be generous. I'd say you got a
Mm-hmm.
4.5% rate, and you break down the first 5 years of payments on that mortgage, 80% minimum is going to interest every single month, right? So that's money you're never getting back. Plus you have a condo fee, plus property taxes. You can add all these things up. Plus you put, however many $1,000 down, 50 to 100 grand down to buy the property. Well, that carrying cost per month is, let's call it 3,500,
Easily,
and
easily.
easily, right? Probably more.
Yeah, probably more.
You could probably rent that same place for 25.
Yeah.
Now, so for many years, the market was outpacing how fast people could save money because leverage is a beautiful thing on the way up and like a terrifying thing on the way down, right? I still think long term everybody should, and I'm not saying this as a real estate agent, but I believe it to my core. Home ownership is a great thing long term in Canada. It's hard to argue against it when you look at net worth numbers from stats. It is what it is.
We
But
agree that we agree with that. Like, we're not trying to push that
yeah,
rentals are the only way forward. We totally agree with that.
but I would say, like, for the next 2 years, renting, like, honestly, when you break down the numbers, might be the smarter choice. I don't know if 5 years I'm going to stand by what I said there,
Hmm.
but like for the next two, even if rates are coming down, the gap is just so big. And
Yeah.
even if the market goes up a little bit, you're saving so much money for that. 18 to 24 months that maybe that could help you get in, and prices, because I don't think condo prices are going to go up significantly in the next 18 months.
I don't see how yeah, I don't see how
They'll
they
go
can.
down a little bit this year, and then we'll see what happens at the end of the year if everyone takes off before the holidays like they did last year.
Hmm.
But there's a strong argument right now for renting over the next 2 years. Probably financially could be a better decision.
That's interesting. And I'm kind of curious what you're seeing as well, because what we're seeing on our network of sites is that there's a huge demand right now for shared accommodations. You
Mhm.
know, going from one bedroom to two bedroom, you're not doubling the rent, but you can effectively split it. But there's another side of it as well, where we're seeing homeowners renting out their basements a lot more, or
Yeah.
spare rooms. Like you said, carrying costs are what they are. And, if you're on a variable rate, your mortgage payments have just pretty much skyrocketed. So we're starting to see that those listings really come, some people are even subdividing their basement to have two rental units in their basement. Are you kind of seeing that trend at all, where buyers are looking for a place where they can maybe rent part of it out?
Yep.
Is that becoming a little bit more of demand just because there's so many people who want to get into a rental?
Absolutely. I literally had a conversation yesterday about this with somebody. They're currently renting, and they're running the numbers. They need to stay under a million for purchase price, so that they don't have to put
Mhm.
20% down on everything. Um, and they wanted to get some. They only wanted me to send them listings, and this isn't core Toronto, right? This is like, they're willing to go out a little bit.
Mhm.
Must have separate entrance or two kitchens or basement apartment, and
Hmm.
I can like filter based on that. So I took a look, and it's something that we do with clients is before we send them what's on the market, based on what you tell me you're looking for, I'll create a list of what's actually sold in your criteria in the last 3 months. And we would call it like the reverse search. And I'd send you that list first and say, hey, this is what matched what you told me you wanted. Would you have bought any of these right
Hmm.
now if they were available
Gotcha.
for sale? Right. And I was actually kind of surprised that there was a lot of good options.
Hmm.
And his whole thinking was, I'm renting now. This is my current rent. I have the down payment, but if I'm able to buy a place and rent out the basement, my living costs is actually going to be lower than what I'm currently paying right now in rent, because I'm able to rent out a portion of the property.
Right.
And I think that's where people are being savvy. And for that, I mean, you kind of have to have freehold housing, right? It's kind of tough to do it
Exactly.
with condos. So the price point is going to be a bit higher, but yeah, shared accommodation I think is and not just shared accommodation, but like maybe investing in real estate with a friend to buy the
Hmm.
property together. I've done that before. Not the place that I lived in, but as an investment, and it worked very, very well.
Hmm. Tom, do you have maybe any advice for first time rental property buyers who want to get into this space? Like, I'm sure you I'm sure you have tons, but for
Yeah.
those who are maybe interested in that, because it could be a great extra source of income.
Yeah. I think the first thing is that if you look at the last 24 years since the year 2000, if we're talking about condos in this conversation, what
Mhm.
prices have done. And if you look over the good, the bad, the ugly over the last 20 plus years, there's rarely a time period under 5 years where you're not going to be okay. Or sorry, over 5 years where you're not going to be okay.
Okay.
So let's say even you bought at the worst possible time, February 2022. Now, I'm not saying those prices are going to catch up in 5 years from that time, but they're not going to be as bad as they are today, right?
Hmm.
So the first piece of advice is like, when I started investing in real estate, actually the guy that owns the real estate brokerage that I work for, he sat down with me for lunch and he took out this piece of paper and he just wrote my name at the top, and then he put property A, B, C, D, whatever, however many you're trying to buy. And he's like, here's what happens. Rent typically goes up, mortgages typically go down. That's just a fact of how this all works. And he's like, let's look at this long term. Property A is your primary residence. Okay. Property B is your first investment property. So ideally, people want cash flow and appreciation, but you don't get both in Toronto. And in fact, the last 5 years, you get neither.
Right.
Right. So you really have to look long term. Because I was always thinking value goes up. That means my net worth goes up. I know you pay capital gains and everything when you sell it, but running all the numbers on it. And he's like, no, who cares about, just all you got to focus on is get that mortgage paid down. And then in 30 years, when the mortgage is paid off, rent has gone up, and there's risks involved, of course, with renting out properties.
Hmm.
How much would you need to retire right now, inflation adjusted, when it's time to retire? And like figure out what that number is.
Hmm.
And he's like, whatever you think it is, it's more. So I started looking at it. I'm like, okay, I have my primary residence. I have a cottage, which I don't really rent out, and then I had a few investment properties. And so I look like, okay, 25, 30 years down the road, if these are all paid off, because they will be, you know, how much do I think I could get in rent from each of them? If you add that all up, that's just, at that point, it's money in my pocket. It's going to happen, right? Because there's no
Hmm.
mortgage attached. Of course, there's maintenance and taxes and things like that. That was kind of eye opening to me, because many people just think, oh, I'm going to buy it, maybe I'm going to cash flow on it, or it's going to do well. But the last 5 years, it's been like a punch in the face to investors.
Hmm.
And a lot of people are going to sell because they can't see the long term. And I promise, in 10 years from now, they're going to regret it. So my general advice would be like, I actually tell some people that watch our podcast, like, once you've bought, stop watching us. Stop, like, just go live your
A ringing
life.
endorsement. Yeah, I hear you.
Go No, but like, go live your life. Like,
Yeah,
the market's gonna do what the market does, regardless of what me or Steve say or anyone
yeah.
else on the internet. Like, it just is what it is. But if I was investing right now, I would be buying a building that's not currently under rent control, because that just gives me more options.
Hmm.
Um, Ideally, even if I'm buying it as an investment, I would want to buy in a building that is more owner occupied than tenanted.
Okay.
You can get that information in the status certificate, but it's not always perfect. And you can also just do math on the last 2 years, how many properties leased out in the building, and try to figure it out.
So, are,
And sorry, last thing, we talk about this a lot. In crappy markets, units with wow factors still lease and still sell.
hmm,
So a wow factor could be just, it's a small unit, but it has parking, and all the other small units don't have parking. That could be your difference maker.
that could be enough.
It could be just a good, like these new condos, the floor plans, some of them make no sense. It's like the older ones, you get a big room and bedrooms on each side, and it's like, it just makes sense. So a
Hmm.
good floor plan, a great view, a loft style property. Because if you are trying to rent or sell a property in a bad market and you don't have a wow factor, your price has to be your wow factor.
Gotcha. You touched on it very briefly. So properties with existing tenants, I'm assuming, are much more challenging to sell. I would assume that's the idea behind it. You don't want to look for that. You were saying.
It's like a Mission Impossible movie where he
Yeah.
does the mission every time, but you gotta, it's a
Yeah.
battle. Um, on the selling side, I've run the numbers on this. Just percentage wise, for the properties that are listed that are tenanted that actually sell, is much lower than owner occupied and vacant.
Right.
Um, for obvious reasons, that when there's this much inventory, why would you take the risk to buy one that's tenanted if you didn't have to?
Hmm.
Um, it extends out the closing date because of the notice that you have to give. And people hear the horror stories online that if the tenant doesn't leave and you do close on it, like, that's a 6-month battle, even if you do everything the right way.
Hmm.
So yeah, personally, right now, with our first time home buyers and even investors, I'm just saying, like, owner occupied or vacant, that's where I would start your search, unless you can find a tenanted property that you can get at such a good price that it's worth the
Mm.
risk involved.
Right.
And on the flip side, when we're talking with our sellers, it's like, hey, even if you sell this place with a tenant in it, you have to pay them a month's rent compensation when you give them the N12 when the new buyer moves in. Why not just offer them 2 months rent and see if they're willing to sign an N11 and go find another place? And most people, like, I know we hear the horror stories, most people are super reasonable.
Hmm.
And they're like, yeah, okay, 2 months. I was going to get 1 month, and you give me 90 days to go find a new place. Like, I'll sign that.
Yeah.
So I
You
found
know,
that works pretty well.
it's interesting to see how like reasonable most people are, and we're seeing that too when we talk to renters. And when we ask them about rent control, a lot of them seem to really get it. You know, like they understand like why for a landlord sometimes rent control is not as ideal for them, but they understand why for the renter rent control is a good thing because it knows that their housing costs are going to remain relatively stable
Hmm.
if they're of course in a building that allows for that, right? It does seem like renters and landlords and home buyers, we're kind of all in this together in this housing supply crisis, peaks, valleys, that we're kind of all in this together. And even renters seem to understand that, you know what, they get rent control and they get maybe why it's not as prerogative for a landlord to just fall in line with whatever the rent guideline is because their costs are going up too. And it
Hmm.
seems like we're all kind of in this together, which is kind of nice to see.
It should, there's fringe on both sides of it, in the
Always.
1% on both sides that are bad and aggressive. And but yeah, I'd agree. Like in my experience, I tell people this a lot. Like 98 to 99% of the time when we help a client buy a property as an investment, they rent it out, it's a smooth experience.
Hmm.
Once in a while something happens, but very rarely. It's just those are the headlines that make CBC News, right?
Yeah,
Like
exactly.
that's why people think, oh, this is a regular thing. It's not.
No. Do you think at time of this recording we're kind of getting to the end of the summer? Uh, are seasonal changes something that you look for? Are there certain seasonal changes that seem to happen every year regardless of the market? And maybe there is certain pockets or windows that are more beneficial for somebody to either get into the buying market,
Yep.
getting into the rental market, whatever that may be. Are you as we get closer to the colder months of the year?
Yeah. If you just look at like price wise, rental prices and average sale price across all property types, August and December, arguably, you will get the best price as a buyer.
Hmm.
And there's a few reasons. One, nobody else wants to do it because they're enjoying the summer or they're getting ready for the holidays, right? Um, but more importantly, maybe people that are for sale in August probably like listed in July, and they're still on the market now, and the summer's about to wrap up, and everyone else is at a cottage or on vacation, or the kids are out of school. And at the end of the month, we found a lot of people are getting really good deals on things in August, and the same thing happens in December. But also saying that like there's typically not as much to look for, so it's always kind of that trade-off. um our stager actually just put something on social media saying she's fully booked for the first 2 weeks of September.
Hmm.
So listings are coming
Yeah.
more. Like it's not like we're magically gonna become a seller's market now. It's like we're pretty balanced out now, but of active inventory in the 416 in Toronto, condo ownership, townhouses as well, is 70% of
Hmm.
active listings. So
Wow.
we are very much in a buyer's market for condos, and we're in a balanced to seller's market for everything else. But when you clump it all together, it looks like a lot's on the market because it is, but it's mostly condos.
Hmm. That's interesting. And maybe this is a shameless plug, but we post every month a rental report on Rentals.ca that we
Which
partner
is
with Urban
great, by the
Nation.
way, which is
Yeah. Hey,
awesome.
thank you. And what we've been seeing for a while now is Vancouver and Toronto rents are actually going down a little bit.
Hmm.
But what we're seeing more is the secondary markets kind of impacting it differently, where affordability is much more prioritized than accessibility right now. And because work from home, renters can now effectively live further away from these metropolitan cores and seek rentals anywhere in search for more affordable rents. I kind of think that the secondary markets are really what's going to impact the housing market in the future for much more potential growth because people are willing to go to these secondary markets, especially as interest rates decrease. Maybe it becomes a little bit more, actually, much more affordable to just live a little bit outside of where you're
Mm.
maybe where you would like to live. Do you think that these secondary markets are going to impact the housing market more in the future because that seems to be where we can actually build and people will buy
Hmm.
for a variety of price reasons?
I think absolutely, because I think you have the people that have acknowledged that at least what they want, maybe they don't feel like they can afford it in the big markets.
Mm-hmm.
So They may have already realized this a while ago and gone to the secondary markets based on population size. Um, but then you look at, like, when you put out your monthly reports, and it's like Edmonton rent is up, Calgary rent is up, Halifax rent is up, Toronto's down, Vancouver's down, Winnipeg's going crazy.
Hmm.
It's like weird. It's like, okay, so the markets that I would deem as more affordable are going up in price, and the markets that are expensive are going down. And Toronto's not like going from like really expensive to wildly affordable. It's like a,
No.
3% on a
Yeah.
$3,000 rental isn't life changing, right? I guess if it compounds year over year, you could have that. I can actually give you a real story. I said a client, they had an investment property. The tenant was paying 3,400.
Hmm.
Tenant gave notice, um, and I was like, okay, well, do you want to rent it out again, or do you want to try to sell it? And I ran the numbers. We rented that out in July of 22, which maybe was the peak of rental prices. I'm not sure. Eh, Today we could have got 31 if we were lucky, and we had it for 34. So that's like a real life
Hmm.
example of, yeah, rental prices have come down in Toronto since the summer of the craziness.
Hmm.
And then maybe this is more of a question for you, is like, if you look at all those other markets where things are going up, it's not just rental prices, it's sale prices too.
Yes.
So you have the
No.
people from the maybe the bigger markets that are going there purely based on affordability, but then you have the people that are just like, they're looking at those markets as the new place to invest. And that's what I think is interesting. It's like, we kind of joked when the pandemic happened that everything outside the GTA just went up so fast in value that Toronto went up, but nowhere near what the other. It was like the great equalizer.
Hmm.
I think it's now like Canada wide.
I think so too, and you touch on a really good point where, and I try to make sure I say this when I'm talking to people, is rents did go down in Toronto, Vancouver, but after 3, 4 years of exponential growth, it's not like something that we want to celebrate for renters because it's still extremely expensive. But the provinces that have the most affordable rents are the provinces that are going up the most, and it's quite a swing. Like BC and Ontario for this last month, they're the only provinces where asking rents have gone down. Uh,
Mm-hmm.
Small 1 to 2%, but other provinces saw 20% increases, right? So that's quite the swing. And it's
Yeah.
interesting when you look at what's happening too with interprovincial migration. And
Uh,
we saw from Stats Can, BC actually had a decrease for the first time since 2012. They had 8,500 people leave British Columbia for interprovincial migration to go throughout the country. And it makes sense when a 1 bedroom apartment in Vancouver right now, it's not cheap. And if you can go to Saskatchewan and get a 1 bedroom for $1,300 a month, it adds up, right?
Definitely. I was gonna say all those people from BC probably just went to Alberta, but
Oh, Alberta
but
was calling. Yeah.
you know what could be interesting, and this is 10 years down the road, but from
Mhm.
the data you guys have, so going back to, let's call it pre-pandemic, let's say January 2020, what was the difference in the asking rents in Toronto versus Vancouver versus Winnipeg versus Halifax, all the markets, right?
Mhm.
And then in 10 years from now, it's still going to be expensive across the country, but it may kind of go like this, where they're never going to be the same, but it's like Toronto might hover for a while, where other markets are going to go up, and it's going to get close. And we used to have this saying that used to apply, which was, how far do you have to drive till you qualify? It was drive till you qualify.
Yeah.
And then we were joking when the pandemic happened. It's like some people were like, oh, I'm going back to the city because things got crazy. Now it's
Yeah.
like, how far do I have to fly to go get a more affordable housing alternative? But if everyone's thinking that same thing, at what point do the numbers get too close that then it swings back the other direction?
Exactly. Yeah, and that could be something that happens too, where it seems to be that the number one thing that they're talking about right now in politics is supply, 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 increasing supply. And the government, whether it's provincial or federal, they've had a lot of policies, changes in regulations. They've removed HST for developers who want to build
Yep.
purpose-built rentals, in the hope that this does impact not only the rental market but the housing market in the future. Are we positive on how this is going to be? Do we like the changes made, or is it so much as maybe it's not necessarily some of the new policy changes, it's just the fact that they're willing to address it and so much attention is being brought to it that might be a win in itself?
I think you make a good point there. Um, everybody on all levels of government and even different political parties have the same understanding, at least in what they're saying, which is like something has to change here. I know
Mhm.
we have these wild projections of what we need to build over the next however many years that it's unrealistic. Like it's not going to happen.
No,
It just
no.
it's not going to happen. So it's like I don't want to be pessimistic about it, but if immigration is even close to what it's been the last few years and that continues, if shovels are not going in the ground right now, well, what's going to happen in 5 years? Like, we're going to have the
Uh,
same conversation like we had 5 years ago and 5 years before that. And sure, maybe some markets will do better than others and things like that. And perhaps a change in government, if that does happen, they'll make adjustments on immigration or I don't know what they'll do. Who knows?
who knows?
But long term, it's very difficult to just look at the fundamentals of population growth, unemployment, and interest rates. Those would be the three things I would track.
Hmm.
Unemployment right now is not great. That's why rates are going down. So then that goes to number two, which is okay, rates are going in a downwards direction. Maybe you give that a check mark for the first time in a long time. And then population growth is the most we've ever seen. And I've always looked at if those are the three pillars. If two of them are strong, then the market will be fine. If all three are weak, that's when things are going to get really bad.
And just to add some more context, I believe CMHC, their estimate was by 2030, we need 3.5 million homes built to restore affordability, which is, I think, 3 times the historical record of pace that Canada has ever built. It's just, it's not going to happen. Like,
No.
there's no way it can happen, right? Um,
And it could be interesting too. Like let's say magically they do it. What do you think they're building?
yeah, that's interesting because that's the other caveat that I try to say as well. It's not necessarily luxury condos that we need. We need student housing supply. We need affordable housing, right? I'm assuming they're going to build what will make them the most money back.
But like
Um,
who's building right now? Purpose built rentals, right? They're the only
that's
ones
the
really.
that's the only that's what the cranes are. They're purpose-built
Yeah.
rentals. There's 3 of them on my street right
Yeah.
now.
So so let's say they even hit half these projections and we do bring 2 million new units. Are a million and a half or 75% of them rent purpose built rental apartments? Not to say that's good or bad. It's just like, well, what are we building things to get people into home ownership or just building more rentals?
Yeah,
Not
exactly.
that one is good or bad, but it's just an interesting conversation.
Hmm. No, it absolutely is. It's gonna. I like to look at it as because all the attention is brought to it. It seems you can't turn on the TV right now and not hear someone in government talking about the housing supply issue. There is that whole thing that I've heard sometimes is, well, maybe they'll overcorrect and they'll build so much supply that it will start to, devalue the supply that's already here. And I'm like, I think we're so kind of apart that would take an exorbitant effort that we don't
It's
have to worry too much about that.
I also think it's important to understand that like they need to build the supply that people actually want to buy. We have condo supply. There's like 2,500 condos, if not more, just in the downtown core for sale right now.
Hmm.
They're not selling. Well, why aren't they selling? It's because
Yeah.
we have the supply,
Hmm.
but then the Leslieville semi for $1.8 million is flying in a week. It's like, well, that's way more expensive. Why is that moving? Well, that's what
Yeah,
people want.
exactly.
And so it's this weird thing where we can continue to build, but if we don't find out what people actually want, then even when it's ready, are they going to want to actually be interested in buying it? I don't know.
Exactly. I don't know either. It'll be interesting to see what's going to happen. And I mean, for those who do kind of want to follow along with you, whether it's to get in contact you about your real estate team or to follow your show, what's the best way to do so?
Yeah, I think just type my name into YouTube, Tom Story. You'll find me there. You can check us out on our website at storyteam.ca.
And we'll link it all in the show notes as well. Tom, I really appreciate it. We love your content, and I think it'll be interesting to touch base again in a couple years from now and see where we're at, if we've changed, if things got better or worse, and just kind of relate what the market is. So, again, thanks so much for your time, Tom. I appreciate it.
Thank you. I will say I am still optimistic I like Canada. It's a great place. I'm
We
not
love
leaving. You
no,
know,
we
like
love Canada.
people are just so negative online, and it's like I know a lot we talked about today is how tough it is and things like
Mhm.
that. There is still massive opportunity in every market. You can say, well, woe is me and give up, or you can figure out how to make it work for you. And maybe that's
Exactly.
being creative by buying the property with the basement suite or buying with a friend or whatever it is, renting with roommates instead of yourself so it's cheaper. I think there's still opportunity and great things can happen. It's just, interest rates went up like crazy and it actually should have been worse. So the market doing what it's done, I think, in its own is kind of magnificent. Now let's see what happens moving forward.
That's exactly it. And we try to say the same thing. It's like, look, it's going to be a little tougher, but these are some things that you can maybe do for, as a renter, right? Make sure you get references in check. Make sure you
Yeah.
get an employment record already so that when you're applying for buildings, you have all this stuff already that can maybe separate you from the rest. Because, like I said, competition is really high, but
Yeah.
we'll see what it is. But again, Tom, thanks so much.
Thank you.
Really appreciate this. And we'll be following along with all your content for some time. So thank you.
Sounds good. Thanks, man. Thanks for having me.